Hello, everyone, and welcome back to yet another episode of the Velocity Channel. Listen, we're going to go ahead and settle the score. We're going to go ahead and settle this fight, okay? Who's going to come out the winner? The mortgage or the first lien HELOC? We need to know, right? We can't keep on towing the line. We can't keep on straddling the fence. Either the mortgage is the way to go or the first lien HELOC is the way to go. Either the 15-year or the 30-year or the 40-year mortgage, which means death pledge, is the way to go, or the first lien HELOC is the way to go. And we want to persuade you, not by stories, but by the numbers. But before we get into that, like, share, and subscribe. Listen, this needs to go all around the world. Can you imagine prime ministers telling their banking team to be like, you know what, for their country, we need to implement velocity banking. That's how we can get out of this crisis that we're in. You know what I'm saying? Listen, you cannot solve a problem with the same mindset that got you there. All right? So let's get into it. All right? Here we have a typical mortgage, actually back in what, 2000, and that's an old percentage rate. Okay, so the percentage rate now is going to be like what, 7, 8. We'll just go ahead and go with 8. You know what? Let's go ahead and go with 7. Okay, because I'm gonna go ahead and show you the 7% on the mortgage side is not the same 7% on the simple interest side, which is the first lien home equity line of credit. Okay, so we have the principal loan amount of $200,000, term in years, 27 years, periods per year is 12, and then we have the number of payments is 324. We do have the monthly homeowners insurance at 125, and then the monthly property taxes is actually going to be $291.67. Now, monthly payment with the P&I, right? $1,375.63, escrow $416.67 for a total of $1,792.30. Okay, that's all in the mortgage. You see that? I see that. Okay. Now we're going to go to the first lien HELOC side. Okay, look at the principal loan amount, look at the annual interest rate. But on the first lien HELOC side, this is what we have to be concerned about: monthly net income. Okay, and let's go ahead and take that down a few notches. Let's say you only made 5,000. Okay, and then the expenses were 3,000. Okay, income after expenses is $2,000. Why are we including that in the first lien HELOC? Well, because with the first lien HELOC, you don't have a mortgage. You got a new checking account. You got a big fat checking account. All right. Annual homeowners insurance, $1,500. Annual property taxes, $3,500.04 for that total amount. Then we have the payment information. And this is what I want you to look at. All right. You see it. Now, let's go deeper. All right. We're going to go to the summary. Look at the comparison. Total payments for the mortgage is $445,704. Years to pay off is going to be 27. Okay. Total payments on the first lien HELOC. Okay. $356,296.58. That's, watch this, that's with an average minimum monthly payment of $700.88. Okay. But your minimum monthly payment over here, okay, on the mortgage is a must. You have to, meaning you don't get an option. It better be $1,792.30. That bank has to get $1,792.30. If it doesn't receive it, you're going to be in bad column. Okay, you're going to be in the bad column with the bank. But see, with the first lien HELOC, your average minimum monthly payment, it doesn't have to be, right, $1,792.30. Now, the average monthly cash flow savings, if your average minimum monthly payment was $700.88, right, that's if you paid the average minimum. But what are you going to be doing? You see, all of this on the first lien HELOC side, we haven't even countered with The velocity banking method. We haven't even implemented it yet. I said we haven't even implemented it yet. We're just using the first lien HELOC. We're just doing the bare minimum. Oh, $700.88. Okay, I'll go ahead and pay that. I'll pay it. But are you going to pay just the $700.88? Are you going to allow the cash flow, which is about $2,000? Okay. Are you going to allow the cash flow to pay it? You get paid, right? Income, where does the income go? Inside the first lien HELOC, right? The expenses, how are you going to pay your expenses? From the first lien HELOC. Income into the first lien HELOC. Expenses come from the first lien HELOC. You say, well, CJ, I'm still paying like $2,000. How? Let's go over it one more time. Okay, let's go over it one more time. $5,000 goes in to the first lien HELOC. $3,000 goes out of the first lien HELOC. Listen, brother, sister, you paid your expenses already. What are you talking about? You're paying for the first lien HELOC. I thought you already paid your expenses. Remember, that's what it says. Do you see what I'm saying? So you're using that HELOC as an asset. And that's what we mean by bank account. Because that cash, that $2,000, the bank thinks it's paid, right? Paid. But you know that it's parked. Because what if you need more? You can get more. It's beautiful, isn't it? So let's go ahead and continue on down here. Do you remember the average interest rate used, for example? That's why you're stuck over here with the mortgage with 27 years to pay off, and over here with the first lien HELOC without utilizing the velocity banking principle. You're just paying the bare minimum. What is this? $700.88. You're still going to pay it off in 18 and a half years with the first lien HELOC. Does that make sense? And so let's go down here. I do want you to know that the average interest rate used, for example, but the effective interest rate is 4.77. Where are you going to get that? Look at how much you're paying interest percentage of principal over here at the mortgage side, and look how much you're paying with 78.15% on the first lien HELOC side. Remember, you're just paying the bare minimum. Can you even get an apartment for this? Look, $700.88. And you're not going to be paying the bare minimum. Remember, you know how to do the velocity banking method. So now all these things are going on in your mind, and you're like, wait a minute, wait just a minute. That's the bare minimum, and I still pay it off in way less than 30 years? What can I do with all of that interest? Exactly. Now, let's go down here. I don't want to bore you too much with this, but let's look at the differences in, let's call it right here, at the 24-month level. Look how your beginning balance is. Over here at the mortgage side, it's $194,000, while over here, the beginning balance is $184,000. And remember, folks, this is bare minimum. $700.88. If you want to do that, you can do it. If you want to pay $17,000 or $1,792 for a $200,000 house, you don't have to. All right? You don't have to. So I just wanted to show you that. Show you the difference between first lien HELOC and current mortgage. Because you know what? It's not about, right? Look, it's not about how much you make and how much goes out. It's all about the cash flow. You want an example of that? Let's do it. So you make monthly net income of $9,000, but you get average monthly expenses of $7,000. Your cash flow is still $2,000, which is why you got the same numbers. Still at 788. Why? It's about the cash flow. So let's say, maybe you don't make $5,000. Maybe you make $3,000. You know what I mean? Maybe your average monthly expenses, and this is an example, you know what I mean? Maybe your average monthly expenses is 1,000 because you're really keen on making sure those expenses are down. Can you still afford the house? I say, can you still afford the house? Okay. Let the numbers do the talking and you make the decision. Folks, if you need any help with the First Lien HELOC, go ahead and click on the description below. Thank you so much for tuning in. Let us know how we can help you, and we will. Big shout out to Sharon. Man, that's great. Awesome. She's taking control. It's amazing how many people are actually saying, you know what? Forget it. I'm going to spend uh, recklessly and I don't know where I'm going. I want to see my future and I want to be pulled toward it. And we help people do that all of the time. Folks, let us help you. Thank you so much for tuning in. God bless, and you have a great night.